Hello everyone, thank you for joining us this afternoon on today's webinar. My name's Amber from the team here at NQA, and I'm happy to introduce you the fourth and final section of our four-part webinar series, which is with our associate partners Auditel. So this series has broken down the journey to achieving carbon neutrality aligned with the PAS 2060 standard, and today we're going to be focusing on the verification side of it. So I'm pleased to welcome Carbon Solutions Specialists Huw Williams and Rob Allison, who will be presenting on step 4 of the journey, which is titled Verification of PAS 2060 to become carbon neutral. So the session will run for approximately 45 minutes, and there'll be time at the end for a question and answer. So if you'd like to submit a question, you can do so in the chat box available, and we'll address as many as we can at the end. We will be recording the webinar and circulating after the session, along with a link to the slides, which you'll have a request to get a link to the slides. Just worth noting that if you have already made that request on the last 3 parts of the 4-part webinar series, then it will come through to you automatically anyway. So I'll now pass you over to Huw and Rob, and I hope you all enjoy. Thank you again to Auditel for the 4-part webinar series, and thank you both, Huw and Rob.
Thank you very much, Amber, and welcome everybody again to the 4th and final seminar, as Amber has just said. Before we begin and before I introduce Huw today, I just really wanted to provide a small recap again to remind us all of how we've got to this 4th final but probably most important step within the PAS 2060 verification process, and that is step 4, the documentation and validation of your carbon neutral claims. We started with the first step in the process, step 1, where we listened to Gavin and Sean explain to us some of the process involved in defining and measuring a genuine carbon footprint report or an inventory for the business, because you cannot manage what you cannot measure. We then went on and listened in the second week to David McDonald talk about and bring to life some practical and real life examples of carbon reduction solutions that have been delivered out there directly as an outcome of following the PAS 2060 framework. Last week, we listened with interest and intent as Mark Miller explained some of the opportunities, but also the challenges associated with the offset community and the sourcing of suitable, high quality voluntary offsets to meet the PAS 2060 requirements. And that leads us really to the final stage in that process, which we're delighted to talk about today, and that is the documentation and the validation of all of the work that's been done to that point. The agenda for today that Huw's now going to take you through will start out by exploring why we believe, as an organization, from the research we've done and the decisions we've taken in our journey, why we believe of the verification options within PAS 2060, why third-party professional independent verification from an entity like NQA is the right way to go. We'll talk about the verification process itself, how to prepare for verification, with Huw providing practical real-life tips from his recent experience of a client having just gone through formal verification, and focus very closely on the key document that Huw will explain, the Qualifying Explanatory Statement, or QES, highlight the importance of data accuracy, and again, as Amber's already said, allow them for ample questions in the closing part of today's session. Without any further ado, I'd like to hand you across to Huw Williams, who will take you through that insight to the final stage in PAS 2060. Good.
Thanks, Rob. Well, as Rob said, Auditel have sort of laid our hat firmly on the third-party independent verification, and but there is other routes that you can take if you so wish. And what we're going to do today is we're going to start off by talking our way through the 3 different routes of that's available to you as a business. These are the 3 routes. So you've got self-validation, you've got other party validation, and you've got independent third-party verification. You will notice that there's a change in language as we look at the 3 different routes. The first one being self-validation, you're validating it. Nothing's being verified because you're doing it yourself. And other party validation is exactly the same. It's being validated rather than verified. The only time something can be verified is if it's verified by an independent third party, such as NQA, who are accredited to do so. So let's look at the first route to doing this, which is self-validation. So the pros to self-validation. Well, really and truly, when I was asked to do this webinar, I sat down and I started to write down pros and cons for each one, and I could only come up with one pro really for self-validation, and that's cost. Obviously, if you're doing it internally, then there's a cost benefit, but that's about the only thing I can find as a pro to it, to be honest. And if we use an education analogy for this, it's imagine if you're in university and you've written a thesis for your degree, and you've spent days and weeks writing this thesis, and you've just decided to give yourself an A. And that is exactly self-validation. You're doing it yourself. The drawbacks to self-validation is that you are going to be publishing your findings. You are going to be making it publicly available. And that leaves you open to accusations of greenwashing or being open to be challenged by somebody. The only way to dispel that challenge then is to go through an independent third-party verification to turn around and say to the challenger, we've done it, it's independent, it's verified, so your challenge is not valid. And that then puts you in a good position. So you may end up back there anyway. The second route is through other party validation. And this is basically, many consultancies offer this. We decided not to, but there are many consultancies out there that do offer it. And the things you've got to ask yourself or ask the consultancy when you're working with them is, which methodology are you working to? Are you working to ISO 14064-1? Are you working to the Greenhouse Gas Protocol accounting and reporting standard? Or are you working to PAS 2060? But you need to be clear on what methodology they are working to. And again, using the education analogy, you've done your thesis and you've taken it back to your tutor and they've given you an A. So it just means that basically you've got your A, absolutely, yeah, but have you got it from the right source? And again, it does leave you open to be challenged. And again, the only way to dispel that challenge then is to go through independent third-party verification to dispel the challenge. Then we've got, if I haven't made it abundantly clear, our favorite route, which is independent third-party verification. Now, the pros to this are huge. You've got total impartiality. If you go through someone like NQA, then it's got to be done in full accordance with PAS 2060. There are no shortcuts. What you publish at the end is completely beyond reproach. And back to the education analogy, the examination board has marked your work and given you an A. And that can't be challenged. No one's going to challenge an examination board for their mark, except you, if you're not happy with it. But basically, you've got a robust piece of work that you can confidently put out into the public domain, knowing that you are absolutely right in what you are saying. So now we're going to look at the journey and how to prepare for the third-party verification. Preparation for verification by the third party is really, really important. There are various things that you have to include. There are various ways in which you have to report, and the QES that Rob spoke about earlier on is the culmination of all that. So what we're going to look at is we're going to look at when should you book your verification, because that's an important thing. We're going to look at the pre-verification, the verification itself, the post-verification, and the issuing of the VOS, which is the verification opinion statement. So let's start off with when you should book it. If you're doing it yourself, then you need to basically timeline the journeys, because you need to be ready. And once you've booked your verification, you do not want to be postponing that. So the date is really important. I always book my client's verification at least 2 to 3 months before I'm ready, so that I can basically got plenty of time to make sure that I can meet all my internal goals, and I can be 100% ready for the first day of verification. So book it well in advance. The way to book it is very, very simple. Basically, NQA will send you an application form. You fill in the application form, you send it back to NQA. They will then send you a quotation for the verification, because it does vary between businesses, size of business, and so forth. And once you're happy with the quotation, then NQA will give you dates, and they will give you a date for the pre-verification, a date for the actual verification itself, and another date then for the post-verification or technical review. So we're going to look at those individually. So the pre-verification, this is a full day at least, and that again depends on the size of the business. And what that is about is the verifier sitting down with you or with your consultant and checking that all the documentation is in place, checking that they're happy with the boundaries that you've chosen, and they're happy with the exclusions of any categories of scope that you have left out. And once they have done that day with you, and there'll be a lot of questions asked about how you've come to the conclusions you've come to and why you've used certain methodologies, they'll produce for you a findings document. It's a really useful document that will basically list for you any item that the wording has been, the wording that you've used is not in line with PAS 2060, any conversion factors, any mistakes that they can see that you've made in your work, which we're all human, we all make mistakes, and no one should ever look at a pre-verification as a criticism. It isn't. We're only human, we all make mistakes. I made 4 or 5 mistakes in my pre-verification, my last pre-verification, silly mistakes really, but it's there to help you and to make sure that when you get to the verification itself, that you've got all the reasoning behind it. Now, what I will say is some of PAS 2060 is subjective, and there are different views on it. And some of the views of the verifier might not align with your own views. And this is the beauty of having an independent third-party verifier, is they're open to discussion. You can talk about why you think what you've done is right. They will talk about what they think is they've said is right, and you can talk about it together and come to a conclusion long before the verification takes place, so that you're both on the same page when it comes to the verification. And that's the next stage. And that's normally about 4 weeks after the pre-verification itself. So you've got 4 weeks to get your ducks in a row and make changes if you need to make them, discuss with the verifier changes you don't want to make them, the reasoning why, and so forth. And then it comes to the verification itself. Now, I'm going to use an example here of a client that we've just taken through third-party verification with NQA, a company called Ashtray Vision and Safety. They're based up in the north of England, and they're a small manufacturer, only a one-site business. And so their verification was a 2-day process. And during these 2 days, the verifier is looking at the actual work itself. And you need to be available during that entire process. So it's not that you're actually on with the verifier all day for the 2 days, but you are there in the background so they can get hold of you on Teams, or if they're doing it within your business in person, that you're available. You have to be available for the verification in case there are any other questions that the verifier needs to ask. So during this time, they will check absolutely everything. And I need to make everyone aware that this is far from a box ticking exercise. Please do not think that they're just there ticking boxes. This is a scrutiny of what you have done. It is a line by line checking of the work that you have provided them with. Because to give you that stamp and that quality and reassurance and robust verification, they need to make sure it's right. And that's what they're there for, is to make sure that what you have done and what you've presented to them is right. So during that day, they sample. So and we'll come on to evidence in a little bit further down in this presentation, but they sample the work that you've done, they check it, and then they scrutinise the QES, or the Qualifying Explanatory Statement, which is the major document at the end of this process. And they scrutinise that and make sure that it meets past 2060 standards. Following that, there's a post-verification. Now, this is the certifying body's own checks of what they have done. So it's not something that you need to be involved with, or the client consultant needs to be involved with. This is where there is an independent technical review of the verifier's work. So it's a double check, if you like, to make sure that all the statements the verifier has made in the verification opinion statement, the statements you have made in the QES that the verifier has accepted, has got no problems with it. And if there is a problem with it, you'll get another findings document. And that findings document will tell what they're not happy, what the verifier's done, or what they're not happy with your QES. So that comes back to you as well. And then again, it's open to interpretation. So there's a conversation that can happen there. Once that's complete and everybody's happy, then they issue the VOS, the verification opinion statement. And this is the document that is produced that is basically ratifying your QES and all the work that you've done up till that point. Now, as we said, everything comes back to the qualifying explanatory statement. Now, this QES is a public document. It must be made publicly available. That is a requirement of PAS 2060. And what it does is it pulls all the work that you've done together. So you can see all the different aspects of the items that are included in the QES. There is a much more in-depth diagram than this for the QES, but we've just simplified it into these documents for the purpose of this presentation. So let's look at the first thing, the workbook summary. So this is a final calculation document, and it details all the conversion factors. And this is a screenshot of our front page workbook. It contains the data on all three scopes and all the categories within that you're actually reporting on. It includes a value chain map of the business and an emissions map of the business. The conversion factors that you've used, in the case of the UK, it would be the Bayes or DEFRA factors. And inside this workbook is also the screenshots of the actual factors that have been used. The front page defines the entity and the subject that's being measured and the reporting method used. So you have different reporting methods. So you have equity control or operational control, and that's all down to whether you own percentages in another business that you want to report on, or whether you just want to report on what is under your operational control as the subject. The next item that it goes into the pack is the consolidated data. Now, this is the file that houses all the data that's been harvested from the subject, all the calculation methods. So basically, if you're in a maths exam and you've got a maths question, you've got another piece of paper where you've got all your scribblings and your workings out, that's effectively what this document is. And what it does is it shows the verifier how you've come to the calculations that you've come to. But also in this document is the screening and analysis, because a lot of carbon reporting comes down to the data that you put in. So it's that old adage with a computer. It's like with these online calculators and all that. They're all great, but garbage in gives you garbage out. So you need to analyze and scrutinize the data that you're actually putting into your carbon workbook. And at the end of the day, in 95% of the cases, the clients that I work with, the data is flawed, or it has gaps in it, or it's not correct. And an example of that is in energy. Electricity is the biggest one. You'll enter your bills into an online calculator and you'll get a figure. But what if the bill's been estimated? What if there's been a refund? What if there's been a reduction? All these things need to be looked at and delved into and dug into to get that actual kilowatt hour figure that you've used as a business. Otherwise, you're either inflating or deflating your carbon footprint. So you've got to get it right. So the data that goes into this is all analyzed. And this is probably the most time-consuming part of creating the footprint. And you know, as Sean and Gavin said in their in their session. Getting this right is paramount. And then you can report back then on all the data gaps, and you can fill all those gaps in before you move on to the next stage. The next item is the evidence log or evidence file. And what this does is, this is where you would put all the original data. So any bills that you've taken data from, invoices, or data sheets. A lot of clients supply us with spreadsheets with their transportation information in, for example, or they've supplied a spreadsheet with their electricity usage in. And that's all fantastic. However, you do need the evidence behind that to be available, because when the verifier goes through the sampling process, it's not the spreadsheet that you took the data from they want to see, it's the actual data. So, for example, with Ashtree, we had some 1,800 lines of transport, downstream transport and distribution. So the verifier randomly out of those 1,800 lines picked 50, and then we supplied the dispatch notes for those 50 lines, and the verifier checked the date, the form of transport, the weight that was on the dispatch note, and the destination to make sure that that lined up with the spreadsheet and in turn with the workbook and our calculations, to make sure that he had a good sample to confirm that the data that we were using was correct. Then we've got other documents. The QES also needs to contain 2 other documents minimum, and that is a carbon footprint report and a carbon reduction plan. So the carbon footprint report is a detailed but easily readable version of the workbook. So all the graphs and that go into the workbook, and all the calculation, the breakdowns by month, basically get put into a carbon footprint report. So, I mean, Ashtree's, for example, was around 27 pages long, and it went through each scope individually. The carbon reduction plan, this is the what, when, and how carbon savings are going to be made going forward. It's a really important document in PAS 2060 because you're held accountable to what you say you can reduce, because as we all know, the government is not just looking for us to become carbon neutral by using offsets. The government is looking for businesses to actually reduce their carbon, actively bring it down. And so PAS 2060 is also looking for that. And so your carbon reduction plan needs to be achievable. There is no point in inflating the capabilities of your carbon reduction in the next 12 months if you do not seriously believe you can achieve them. Because if you haven't reduced or met those KPIs that you've set yourself, you will fail the next year's carbon PAS 2060, even though you've offset, because the whole point of this is to get your carbon down. Then the next bit is to offset, and in the QES you have to provide an offset strategy. So you've got to say what you're offsetting, why you're offsetting. And as Mark said last week in his, offsets have to be verified. And the other thing that your offset strategy has to show is that they are retired, because that's what you're doing. You're retiring them, and that gives you the carbon offset. They need to list the project that's been invested in. They must be verified, and the number of units purchased and who purchased them. And if you want to know more about offsets and what is acceptable, I would suggest that you go back to NQA's website and download the recording for last week's webinar with Mark Miller, which was a really good insight into offsets and what you can and can't use in PAS 2060, and also what you should and shouldn't buy. So then we get on to the methodologies, detailed descriptions of the methodologies that have been applied to this process. So this document shows a detailed record of everything that you've done, how you've done it, how you calculate it. It shows your inclusion statements, so all the scopes that you've included and how you calculated them. If you used any outside websites to calculate mileage or air miles or sea miles, you put those in so that the verifier can check them and make sure that they are credible and that they're happy with them. They will also go in and check that you've used the right mileage for air travel, sea travel, and so forth. So put the links into the website, and a full explanation of the process that you have undertaken. And this document is something that I build as I go along. So this document, when I start a carbon footprint process, this document, I create it for the client, it's open, and everything I do as I do it is documented in the methodology report. It's two reasons for that, really. One, I always need to be able to look back and see what I've done, because I'm over 50 and I forget things really easily if I haven't written them down. I'm sure there's a lot of other people watching this that are the same. But mainly, it can reduce the amount of time the verifier needs to spend asking you questions, because a lot of the questions that they would ask you, the answers could be within this document. So it saves time for both of you, and it's a really good practice to involve this document in your final submission. And those are the elements that make up the final QES. As I said before, and I'm going to say it again because I think it's very much worth saying, verification is not a tick box exercise. It's a detailed scrutiny of the subject's emissions and how they are calculated. This process is impartial and it's detailed. So if you complete this under a third-party verification, it's not open to challenge or claims of greenwashing. So let's look at the QES itself, the Qualifying Explanatory Statement. The example I'm going to use is of Astri Vision and Safety, the company that we've just taken through verification and have achieved carbon neutrality for 2021. And we're going to have a quick look at their document. So this is what the document looks like. It's been done in Astri's corporate colors because it's an Astri document, not an Auditel document or an NQA document. It's their own document. And there are certain items within the QES that are a requirement under PAS 2060. And the reason for this is PAS 2060 is a transparent standard and lays out a subject's emissions in tons of CO2 equivalent and the methods the subject has agreed they will implement to reduce their emissions as per the carbon reduction plan. So let's have a look at some of the essential components. So this first section, a lot of people think this is fluff or filling, if you like. It isn't. A true and accurate overview of the subject and its functions, so that anybody who's reading this part of the document will understand the operation of the subject. So you're explaining the business, what you do as a company, and try and cover off as many parts of that as possible. And this is an area within the QES that will be read by the verifier and will be challenged if he doesn't think or she doesn't think that the explanation of the about us is clear enough against what the business actually does. Then we have the carbon neutrality statement. This is a statement that must include the name of the validator or the verifying body. It's got to state the standard the QES has been written to, the methodology used. In this case, we've used the Greenhouse Gas Protocol Accounting and Reporting Standard. And it also mentioned the verification opinion statement and that it should be read in conjunction with it. And if you remember, the verification opinion statement is something that's issued by NQA once you have passed your verification. The next section is a general information section. There's a small introduction there at the top of the slide that you can see that just basically tells you what period this QES covers. In this case, it's the 1st of January to the 31st of December 2021. And then you have the general information. Once again, this has to include certain elements. The entity or subject that's making the statement, who is responsible for the report, who evaluated the carbon emissions, the subject, as the entity and the subject can sometimes be different. For example, you may be a large company in the UK with 5 different sub-companies in the group, and you may only be doing one part of the group. So you would be the entity as the main group, and then the subject would be the sub-company that's actually doing the footprint. So that's why you've got an entity and a subject. And we like to include anything the subject has done to reduce their carbon prior to this process, because I think it's good to give credit where credit's due. And as many businesses have done things like put solar in, or they change their lighting to LED, And they've done all that before they brought you in to do the carbon footprint, or before you started as a business to do your carbon footprint. And I always think it's a really good thing to put this in to say, because this is a public document, so everyone's going to be reading this, so that people know that you started this journey a while ago. It's not something you've done on a whim. If anything you've done beforehand can give you credit for it, and that's what we do at this part of the QES. Then you've got the boundaries of the subject. We use an emissions map to depict this, that shows the value chain of the business right the way through, and where the emissions are and the boundaries that we're including. And then we have a quantification of the carbon footprint itself. So these are the scope 1, scope 2, and scope 3 categories, and we always put on the number of tons of CO2e that's being created, and we always work that out as a percentage of the overall carbon footprint. And as you'll see here, which is pretty normal to be honest, 94% of the emissions are in scope 3. And I've seen it, probably haven't seen it much lower than 85%, but I have seen it as high as 97% of emissions being in scope 3. So that's quite a normal figure. Then the declaration of commitment. So, you know, this basically says that they've already reduced their emissions by 28.5%, and I've made a commitment to further reduce emissions in the next 12 months. So in the next reporting period. And they're looking to, in scope 1 and scope 2, they're looking to reduce by 27 tons there. And then we bring in the carbon reduction plan and the projected emissions of the reduction. So you're looking at what they're going to do in scope 1, what they're going to do in scope 2 and 3, how they're going to do that, because that's important. And so these are all the KPIs, if you like, the things that they will be held accountable for in the next verification period. We then show what the subject is aiming for over a period of time, because as you know, the government's aim is to get us all to net zero by 2050. And this has been covered before in previous webinars, but I'm going to go over it just quickly again for you. Net zero isn't achievable at the moment. It's something that will be achievable as technology becomes better and we have more carbon capture available to us. But at the moment, net zero is not achievable. The best you can achieve at the moment is carbon neutrality. And that's what Past 2060 is all about. What we've done here is we've sat down with the business and we've looked at what we could possibly do over the next 5, 10, or up to 2050. And, you know, we've done it here till 2025. And ASHTRI are confident that the reductions that we're looking at over the next 5 years are achievable. And then next year we will report on that and we'll set ourselves new KPIs for the following year. And also in here we've got some commentary around some of the scope items in scope 3 that we're looking to address to meet those targets. Then we've got carbon intensity metrics. Now, carbon intensity metrics are one way of KPIing your carbon reduction. So you can either go on a complete footprint. So if you're a business that knows it's not going to grow, it's not going to shrink, it's going to stay around level, and that's where your business is, and that's all you're looking to do, and that's great. So you can then measure yourself against your complete carbon. So you can say we produce 500 tons of carbon this year, we need to produce 400 tons next year. We want to reduce by 100 tons, business is going to stay static, that's achievable. But if you're a business that has big shifts in it, so, or if you're a business that's got, you know, very ambitious growth plans, then carbon intensity metrics are how you KPI it. So basically what we've done here is we've brought these carbon intensity metrics in, and we're saying currently per £1 million of revenue, you're producing 142.47 tons of carbon. So that's our KPI. So if we double the turnover of the business in the next 12 months, we still want that figure down. We still want to see that figure come down. And then we've also done it by employee, by square foot of floor space, square meter, sorry, by ton of CO2 of upstream transport, by ton of downstream transport, and by shipment that went out. So we've got all these KPIs that we can monitor And even though the business fluctuates up, down, those emissions are the ones that we want to get down. And we're committing to them here in the QES. Then we've got the carbon offset strategy. So this is a very simple strategy. It's just, we're going to buy offsets. This is how many we're going to buy. And we've bought them to a scheme that's verified to ISO 14064-2, or those associated with the gold standard or Vera standard. In this case, you can see there is 2 certificates. The business decided to split between 2 different projects to account for their 598 tons, and these are the certificates that were to show that the offsets have been purchased and retired. So the next page then comes on to is inclusions and exclusion justifications. So this is a very, very important part of the document. It's one that's heavily verified, and therefore it can be read as well by anyone, so they can see how hard you worked and what you've tried to do to calculate your emissions as close as possible to being correct. And the declaration of achievement. Now, this is the first baseline year for Ash Tree, so you might be wondering why there's a declaration of achievement. Well, it's simple. They've achieved carbon neutrality. And this statement that you see here is a statement that, according to PAS 2060, has to be written in a particular way. It has to have certain elements within it for it to qualify, because this is the final statement. So if you look at PAS 2060, if you read the standard, you'll see the different statements in there. You just put your business name in and the verifier or validator's name in as well with it. And obviously the managing director of the business or whoever's responsible for the carbon for the QES then needs to sign it. And that's a complete QES. Then we have appendices in the QES, which is your inclusions and exclusions justification. So anybody can see why you've included something, or more importantly, why something's been excluded. And this is just for completeness. This is for the full transparency, basically, so that everybody knows what's happened, what you've done. And this goes on for a couple of pages just to get it right. So the final point is data accuracy. What you always need to remember with this sort of process is there is a process, and you must abide within the PAS 2060 guidelines. And this is something that's taken from, and I love this about the GHG protocol. The greenhouse gas protocol, which is the accounting reporting standard that we use more than the ISO 14064-1. I prefer it as a standard because I feel it's a little bit more in depth. This is the guidance behind the GHG protocols standard, and basically it's 5 rules: relevance, completeness, consistency, transparency, and accuracy. So let's start with relevance. So basically, ensure the greenhouse gas inventory appropriately reflects the greenhouse gas emissions of your company, business, subject, entity, and serves the decision-making needs of users, both internal and external to the company. Completeness: account for and report on all GHG emission sources and activities within the chosen inventory boundary. Disclose and justify any specific exclusions. Consistency: use consistent methodologies to allow for meaningful comparisons of emissions over time. Transparently document any changes to that data, the inventory, the boundary, the methods, or any relevant factors in the time series. Transparency: address all the relevant issues in a factual and coherent manner based on a clear audit trail. Disclose any relevant assumptions and make appropriate references to the accounting and calculation methodologies and data sources used. And finally, you've got accuracy. Ensure that the quantification of all GHG emissions is systematically either over or under actual emissions. PAS 2060 does not allow you to underestimate. When you're calculating your footprint, if there are two different conversion factors that you're not sure which one they could go into, which one they fit into, you always take the higher one. You cannot underestimate. And achieve sufficient accuracy to enable users to make decisions with reasonable assurance as to the integrity of the reported information. What that means is anybody who's looking at your QES and reading about what you're doing as a business for carbon neutrality or carbon reduction can read it and feel assured that the report is robust, that you are doing what you say you're going to do, and that you are going to push towards this 2050 net zero target. And I think I've just come in under the 45 minutes, and some of you will be really pleased about that. Others will be wanting more information. But if we've got any questions, Rob, now would be a good time.
That's great, Huw. Thank you very, very much. That's insightful, and again, yet more insight to understanding the mechanics and how it's done in practice. There's a number of questions that have come in here from the watchers today. The first one, and in part it's been kind of answered, but it's useful to reflect. Is there flexibility as to how all of these requirements as specified by PAS 2060, how they're actually laid out in the QES, i.e. is there allowable interpretation, different formats you can use? No,
the QES is the QES. And if you've got the standard, you'll see in the standard that there's 2.5-page checklist that the QES needs to contain. I suppose you can lay it out differently if you want to, but you want to write it as a journey, start at the beginning, end at the end. So yeah, but you have to include the entire checklist.
Yeah, but I think, yeah, your point there, as you've done with Ashtree, I think the colour scheme, the formatting can be adapted to, certainly from a marketing perspective, to suit the client's needs.
Absolutely, as long as it meets all the criteria of PAS 2060, i.e. it passes the checklist, then yes, the colour schemes, how, all that sort of stuff is all fine. It just has to contain the right information in the right order, basically.
Okay. Another question here, can the baseline period and the commitment period be the same, i.e. January to December 2021?
Well, yeah. The commitment period is what you're going to do in the future. Mm-hmm. The achievement is what you've done. So
yeah, the declaration of intent can obviously follow on from the baseline period. Yeah. Maybe one we'll just come back on just about. I may not be framing the question correctly for you there, Huw, so that's possibly my fault. But given the challenges that we know in obtaining accurate Scope 3 data, can you give us an overview on how that part of the footprint report was calculated in Ashtree's case? Were there any emissions or data that you were unable to retrieve? And if so, were there any measurements put in place, any measures put in place to obtain that data in future years? How did that work?
Yeah, there was some data that we couldn't get from for their purchased goods and services from their suppliers, which did make that sort of part of it difficult. We had to exclude the purchased goods and services from the footprint itself, but we did still calculate the upstream transport and distribution from their suppliers to them. And a lot of purchased goods and services anyway is very, very difficult to get data from, and there are websites that you can go to an industry and get this data, but really and truly, unless you can use primary data, then you're using assumptions. That's not always a good thing. And you're talking about embedded carbon and things like that. And so when it comes to purchased goods and services, same with capital goods, if you don't have an LCA or an EPD of a product from a supplier, or you don't know what they're doing on their carbon journey, then really and truly you can't report accurately on anything. And part of PAS 2060 and part of what we do as an organization is we write to the suppliers telling them what journey you're on as a business and asking them to engage with us. And then you know, they can, once they start doing their journey, then they can supply you with information that you need for yours. So it's a process, and you know, at the end of the day, most companies that I've worked with haven't gone through verification in year 1 because there's been too much data missing. We actually went through it in year 2 when we addressed an awful lot of the data that was missing.
Okay, so in some cases it can be a much longer runway for takeoff. It's you line it up over a slightly longer period.
Yeah.
Okay, and just for the record, you dropped in 2 acronyms there in the form of LCA EPDs. For the listeners maybe who haven't come across those before, just want to give a full title to both of those.
Yeah, life cycle analysis and an environmental product declaration.
Thank you. All right, just to ensure that we try to demystify, not further complications. So, how much percentage-wise Scope 3 shall be accounted according to PAS 2060, and what's the criteria for exclusion of categories in Scope 3?
Well, you know, Scope 3, there is no minimum criteria of what can be included, because it's the value chaining of the business that dictates how many categories that you're going to cover, and it's all down to data and the quality of the data. So, for instance, if you value chain the business and you know the business doesn't have any franchises or investments or upstream leased assets or downstream leased assets, you discount those straight away, yeah, because you're going to have nothing to report in those areas. Then you dig into the other areas and you basically then you're digging into each of the other scopes to find out what data is available, how good that data is, how accurate it is, and whether you can confidently use it as primary data. If you can't use it as primary data, you can look at secondary data. So that is, you know, trying to find an example. Estimated energy bills, for example. Yeah, there's no way you can get the actual kilowatt usage. For example, I've got a client at the moment, it's got 12 months of all estimated bills, but we know their business is quite steady. We know that electricity usage within it's within the office building, actually, not within the manufacturing plant. We know it's quite steady. Number of employees hasn't changed, equipment hasn't changed in many years. So we've taken that as secondary data. And now what we're doing now in next year is we're making sure that meter readings are taken at the beginning and the end of every month, so that next year we can turn that secondary data into primary data. Makes sense?
Yeah, perfect sense. And just to be clear then, so in the event that, and we talked about this obviously in the first webinar on carbon footprinting there with Gavin and Sean, which again is available for people to go back to if they wish to for more detail. But if the data at primary and secondary standard isn't obtainable, there is a basis to be able to exclude, and which the verifiers can accept.
Yeah, basically, there are a couple of acceptable exclusions. You've got cost versus benefit. So the cost of getting that data outweighs the benefit of reporting on it. That's one exclusion reason, and you know that comes down to the time it's going to take basically to get accurate data. I mean, there are websites available like Quantis, and the Office of National Statistics do actually produce one on industries that you can look at. Problem with the ONS is it only goes up to 2020, so there's no 2021 figures at the moment. I've been told by NQA that they would only accept assumptive data from organizations like that if it was the ONS figures, because that's a government produced figure. So websites like Quantis and things like this you can go to for average data. It doesn't really help.
Okay, great. Mindful on time here, but there's a couple more questions to try and get through. What happens if within your QES, within your carbon reduction plan, targets have been set for initiatives and actions that you want to achieve to reduce carbon by a pre-agreed targeted amount? What happens the following year as you go back through your re-verification for carbon neutrality if the targets haven't been achieved in the wholest sense, if you haven't it hit them or exceeded them?
If you haven't achieved the target or exceeded the target, then by the rules of PASS 2060, you won't pass. I think there is a section in there that if you have got mitigating circumstances, I think that could be taken into account. But generally, it's about offsetting and reducing. So you need to do both.
Okay. Have you come across, I know the answer to this, but I'll ask the question for the audience. Is there any form of software application that will assist, hold hand right the way through PASS 2060 process?
No is the short answer. There are loads of online calculators out there that you can enter data into. Like I said earlier on, the data is the quality of the data what's important, not the calculation thereof. However, there are many online calculators that I've seen that are not transparent, and if the verifier can't see how the calculation has been done, then they can't verify it, because that's all part of the process. There is no software that will take you through the entire PASS 2060 process line by line. You just got to buy the standard, read it, and follow it.
Okay, great. How do you take account of energy, or do you have a view on how, because I know these things aren't always prescriptive, how would you take account of energy used at a shared site, for example, a third-party 3PL, a third-party logistics provider?
Third-party logistics provider is the energy within that sits within their operational control, not yours. However,
so you manage that through the boundary, and subject definitions.
Absolutely, because you're paying for a complete service when it comes to a 3PL. I mean, yes, you can say to the 3PL, how many kilowatts an hour are you using a year? You can take the square footage and work it out, how much your scope 2 is within that. But basically, it's in their operational control, because again, this is in the way you're reporting. If you're reporting in operation or in control, as GHG emissions call it, they don't call it operational control, they just call it control, not equity. Then you're only operating on what is in your operational control, not what is under somebody else's full control. So basically, another example of that is if you've got a warehouse and you're renting half of that warehouse off someone else that owns the rest of the warehouse, but you've only got 1 meter, then basically, if you're paying an electricity bill, if they're billing you for the energy every month or every quarter that you're using, then that sits in your energy related activities, and it sits in their scope 3 energy related activities down. Does that make sense?
Yeah, no, it does. Thank you. It's as we said, it's not absolute or totally black and white, but no, it's useful. Thank you. Interesting question here, actually. If you obtain scope 3 data from a supplier who is later found to be greenwashing themselves, in other words, maybe the data or the claims they've provided don't stand up to scrutiny, are you, the client, I guess in this instance, protected under PASS 2060? Will the verification process account for this?
Basically, that's down to you or the consultant that's doing the job for you. I get situations where companies are saying, yes, we've done our carbon footprint, we've accounted for our scope 1, 2, and 3. Here's the proof of our boundaries. And my next question is, who's done it for you? And if they come back and say we've done it ourselves, I don't include it, because it's unreliable.
Yeah, I think that probably speaks to the point. I know we've seen with a couple of recent cases, in fact one of yours specifically there, where there was an element of the supply chain where carbon neutrality was already being claimed on the supply, on the distribution. And in that instance, it had to be measured because it was within the footprint, if I'm right. But a conversation was then held with the verifier. In that particular case, it was NQA, to establish that the claims being made by the third party, the supplier, for carbon neutrality were acceptable to then not count or discount those emissions from the client's overall footprint?
Yeah, it actually it's a good example, Rob. Thanks for reminding me of that one, because it's a good example of where the verifier works with you. And we had a situation, and there was 230 tons of carbon involved in this. The delivery company were claiming they were carbon neutral. The deliveries were all carbon neutral, but we couldn't find any evidence of this at all. And so this all came up at pre-verification. And so myself and the verifier discussed it at length. And this is a major company that we're talking about, so it's not a small distribution company. And we looked at it at length, and we both sort of said to each other, well, if they're claiming this, nobody's challenged them as yet, because they're that big. They would be in the public domain if anyone had challenged them, if they'd have been accused of greenwashing. So we contacted the business. We got nowhere with contacting the company itself. They just went completely cold on us, because you can only get through to regional managers, and basically they don't care, I don't think. But anyway, but this is where it shows great. The verifier at NQA rang me up about a week before we went to verification and said, I've got a surprise for you. I said, go on then. And he emailed me through the carbon neutrality evidence statement that backed up the claim. So we were able to then remove that 230 tons from the footprint with evidence to back up its validity. And that's the important thing. You've got to be able to back it up. There's no point you just ringing a company and saying, what's your carbon plan? Oh, we're carbon neutral. Great, thanks very much. We'll exclude that. Not good enough. Where's the evidence? Who have you done it with? Are they credible? Am I prepared to accept it as the consultant? I sometimes say no. The verifier will sometimes say no. And basically it's a decision you have to make when you're doing your carbon footprint, what data you include and accept as being real, what evidence you include and accept as being robust, and what you don't.
Excellent, Huw. Look, thank you very much. We had a couple more questions here, but we are now out of time. But that was a great example to bring to life the example of working with the verifier. So thank you for that. And thank you for the last 50 minutes of giving us the insight to the journey towards carbon neutral and stage 4 in that process. On behalf of NQA and Auditel and all of our member firms, and guys and girls like Huw and the others that you've heard from over the last 4 weeks, we want to thank you all for listening in. We hope you found some useful insights from what we've shared in our practical experience with PAS 2060, and in particular working with NQA. I wish you all the very best of luck. A reminder on what Amber said at the beginning: full copy of the slides will be available. Those who have already registered for slides previously will get those sent to them later this afternoon. Those who wish for them can get the link when NQA send out the recording. Thank you all very, very much. For those remaining questions we haven't answered, we'll try to pick those up on email directly with you. Thank you.